Okay, looking good. I managed to get my webcam sorted. Fantastic. Hope everyone's well. Hope you had a good trading week. I'm going to go through DAX. Let's just move that mic down. I'm going to go through FTSE. Might even go through a bit of ES, and if anyone jumps on, happy days. I'm going to try and do some more Q&A or live stream answers to questions that I've received in Discord during the week. Did a lot of streams this week. Streamed Euro twice, and I did a US stream, and I jumped on for a little bit of Rosa's stream. So I think it'd be good to work through some good questions. So let's have a look at the German market. So I'm on the FDAX. I've got a 20 and a 200. We've got one more week till the end of the month. You can see we've went above the all-time high and we found some sellers. That's not a surprise. When I see a channel and a deep pullback, usually any buys on that pullback, I'm going for somewhere near the high or at the new high, particularly when the pullback is more than 65%. So if that was your swing point, we're in the lower third. If that was your swing point, it's in the lower third. Trading range expected. Oh, hi Reza. Thanks for jumping on. Much appreciated. Wonderful. Please let me know what, please let me know what worked well. It's always good to hear which bits kind of sink in and which don't. It just takes a lot of little bits to get trading over the line. A frustrating amount of very small little bits. I wish I could just say it was one big thing and then you could just focus on that. So monthly charts, that's what we expected there. On the weekly chart, what I've been saying is because this is a strong sell climax, bears are able to break all the trend lines, push the market down, and they're happy with swing profits down here. The next best place to sell is usually up at the highs. So you tend to get bears who like to sell, and that's why I believe it's a vacuum move, because if I'm a bear, I don't want to sell again until we're up in the highs and we just shoot up. So they sell around the highs, probably small, and then see if they're going to get a scalp here as well. So this bar was expected on the weekly. 1, 2, 3, 4, 5, 6 bull bars. Great. Look left, top of a trading range. We need consecutive closes to break out of the range. And what I said was I'd be surprised if we got a close here. Bull micro channel stops too far away. So you can still be long, obviously, but the profit potential, I think, is limited. So that's the high. And when we look at the daily chart, now, if you don't trade DAX, that's okay. All price action is exactly the same. So if you've got something that you do trade, maybe it's Nifty or something else, we can run through it. I'm not sure how many people trade FTSE. I really like it because it's so similar to ES. It's like, I really enjoy it. So. Hi, Victor. Very good morning, Tim. Good to see you. Everything's doing well. Thanks very much. Hope you have a good weekend. G'day, Andy. Good morning from Northern Ireland. How's the weather in Ireland? Taipei has been scorching hot all week, and I've been stoked because I thought I'd go on a trail today or tomorrow, and it is pouring outside. So good day for chart review. It's like lightning and tornado out there. So if we get rid of this bar on the chart, small pullback bull trend. We got above the highs. Bull bar barely closes above the high, closing back inside. One close and not a second close. So for me, I'm always looking at, is there a bull bar closing above another bull bar? Is there a bear bar closing below another bear bar? Because for me to be short, I want more people short below me. If I'm long, I want more people long above me. The less of that I get, the more likely I am to manage my trade or panic out, as you might say. So expecting a pullback to the moving average, you can call it a wedge. You can call it just too far from the moving average, and then we're back. So bears have done what they needed to do. They got back to the moving average. They also closed back inside this range. So I think first up next week is to retest back out there. So for example, if you were long, you got out of a long, and now you're looking for a short, that's a sell signal, but it's not the sell signal you want to sell. It's a signal to go short soon, if the bears can do something significant. So if you go across to here, close outside, bear close back. No one wants to sell in the moving average at a bull channel. In a bull channel, that's a great place to buy. But it's a sign the bears will start selling at new highs. Now we've got a possible sell signal. Where's the target? Is the target down here? No, it's just to the bottom of the trading range. I think you're going to enjoy trading a little bit more, focusing on the structure that you're looking at the chart, and you know, being a little bit less frisky with your targets. If you go back to here before that spike, one exercise I recommend on my channel, let me just get my channel here. Let's get my videos. Big bars. So the whole purpose of that drill is to look at a big bar, this one, take it off the screen and go, okay, everyone agreed when that bar closed, the market was too high. Why is that? Well, we got a close, that's good. We had a tail above, so that means, well, it's not a strong close above the high. Here's a strong close above the high, more up. Here's a strong close above the high, more up. Here's a weak close. Do you want to buy the close? Do you want to buy the midpoint? Or do you want to wait? We went all the way back down to find where traders prefer to buy. So I think that's a good drill. So now we've got a big bar here. How do we practice that? We look here and go, no one wanted to buy above that bar. You couldn't buy above that bar. Doji, is there any rush, or should I wait for a pullback? And I believe when everyone decides time to wait for a pullback, pullback occurs. So to catch that short is difficult, but to avoid that late long, I think is good. Hi, g'day Atomic Rage. Good to see it. Yeah, I worked out the cam. I've got the turtles, my 3 little turtles that I found at the park, trying to overfeed them, train them up, get them in the gym, and then I'll put them back in the park with the rest of their gang. Andy's saying scorching in Ireland. Yeah, absolutely. Same Al Brooks principles can apply to DAX, apply to everything. So we're going to do more Euro trading room, and you'll notice same pre-market, same setups, same open. If you trade something that doesn't have an open, then you can't really use those day trading concepts that we like to use. So the way I look at it is I prefer to trade something with an RTH open because then I can use them. So I don't think I have a very good edge at Forex, for example. Whereas I quite like trading, you know, FTSE, DAX or ES open first few hours. So close back in the range. Do you want to sell the biggest bar in the past month? Probably not. That's probably a vacuum move to the bottom of the range. We're now back at the range. I'm expecting next week either sideways or an immediate pullback, probably back above that high 23.7. We got up to 24,000, rejected it. We didn't get all the way down to 23. So if I was a bear, then I'm trying to close this whole range, because the more the bears can close back in this range, the less likely anyone's going to buy high, the more likely you can scale into shorts above it, and I think we can drift sideways. Anyway, so that's my view on DAX. Any questions on DAX? We can go through some of the days for DAX as well. Let me just get rid of all that nonsense. It's okay, we've got 1, 2, 3, 19th, that's right. Yeah, I can count, brilliant. Let's go time. Okay. Let's get that as the 60. Let's get that as the daily. Yes. Okay. So looking at Monday. So if you've been on some of my streams before, part of my edge, as I believe, is looking at high time frames and how they gel together. The practice being after the session, before the session, you're looking to squeeze time frames kind of in your mind. How does this pattern, what we might call a small pullback bull trend, appear on a 60-minute chart? Okay, if I scrunch it up, that's what it looks like. And then what happens on the 5-minute chart when I do that? So all these bars are overlapping, but what's the relationship? Okay, well, in a small pullback trend, we create signal bars like this, but far away from the moving average. Do I want to sell below something? No, I probably want to sell above something. I want to give myself room to profit on that short trade. I don't want to be in price discovery. You know, I don't want to be the lone bear who's like, I think the market's going to turn. I prefer to sell above and higher, which is what's happening. So if we go below the low of a prior bar on the daily chart in a small pullback trend, then we're expecting buyers. So if I get the 19th, sorry, I had the chart and then I ran past it. Okay, so small pullback bull trend, we didn't even get below the low of that day. So we went above and we basically had a double bottom with that low. So on this day, bar one's a big bull bar. I don't really want to buy above that at the top of a trading range. You could probably scalp in here. Once we fail to go below that bar on the daily chart, okay, we're not selling below the low of that bar on a daily chart. There's probably going to be buyers. We don't know that yet. 5, 10, 15, 20, 30 minutes later, there's a good chance that we might have seen the low of the day. So we're building evidence. And if I look at the 60-minute chart here, bar 12, bar 24, bar 36, if you were still trading here, now the long's looking much better. This was unclear. This is a two-legged pullback to the moving average. So we can, does that make sense? You can fold in higher time frame, 60-minute. The issue is, if I'm using a higher time frame, I'm still going to be sitting at the chart in 4 hours. Now, I happen to be here because when this was overlapping, I thought, you know what? I've got my yoga mat behind me. I'm going to put some alerts, and I'm not going to rush into anything on a Monday. And so I traded a bit longer than I usually would, and so I was able to get part of this swing. I missed all the juicy bit. That happens a little bit later, unfortunately. Atomic, do you prefer a trading range or more trendy? Oh, it's a good question. Honestly, I'm better at a trading range. And I can't explain why. I can just do better in a trading range. In trends, I think I tend to chicken out on my biggest targets, whereas in trading ranges, I have a real confidence. I very rarely get surprised, frustrated. It's like I can get in sync with that environment. Do I prefer the panic exit or exiting at a signal bar close when we have a bad entry bar or a very bad follow through during the open? Hey Reza, can you give me a bar number on either DAX, FTSE or ES? And let's talk through that trade, because it's a really good question. But like I often say, general advice is kind of like generally good, but with the particular chart, I might say something that's useful. Andy's saying, are we going to get DAX every Tuesday, Thursday? Well, we're going to try and set them up. Yeah, I'd really like Tim Stout to jump in as well. He's a phenomenal trader. The way he sees the market is just awesome. And when I get a chance to listen to him, always learn something new. So that'd be great. Okay, Victor. Yeah, Victor likes trends. It's interesting. So I mean, you self-awareness. If you like a particular pattern on the chart, stay. And if it's doing something you're not good at, come back later. Come back tomorrow. Yeah, trading ranges are quite forgiving. Yeah, so I would say markets have inertia and they tend to keep doing what they're doing. So when you come into a session here, everyone wants this to do this. That's what they want, right? And on ES, that's what happened when we came in on Friday. And everyone said, oh, look, spike, trading range, obviously spike. No, it's not obviously a spike. Sometimes you get a spike, and sometimes you get a trading range that traps everyone, and we just trading range our way through the next several hours. And that's what makes trading difficult. You can't just say it's going to be this and ignore the other side. So failed breakout once, twice, 3 times, 4 times. Once you see this, you know, buy low, sell high. Don't put targets out of that range. You know, if I'm trading a trading range, I'm going for a target, a prior high, you know, high of a strong bear bar, high of a tail, wherever a bull got trapped. Here's a good looking bull bar that reversed. That's my target. And then once, if we break out of that range, it's a new trade. I'm not very good at transitioning a trade from a trading range into a trend. I'm honestly very bad at that. I'm just trading range. Okay, now we've broken out. Now I'm trading a pullback. So highly recommend testing that out. If you can squeeze trades together, great. I cannot. They all have to be separate. Bar 6 or bar 8, do you mean on DAX here? $19th on the Monday. There's a little delay, so I'll just wait for your response. I'm talking about DAX Monday, the 19th. You mean ES yesterday. I think this is what you mean. ES yesterday. Okay, DAX yesterday. No, okay, we got it. Here we go. That's DAX yesterday, the 23rd. Yeah, Andy, his measured move precision is crazy. He mentioned a price, and then we get it to the tick, and I'm just impressed. Just so impressed. Okay, so DAX yesterday. So here, bar 6 or 8. I'll just make sure we're talking about the right chart. Okay, I think it is. So no, lost hold of it. Well, because I was looking at this day. It's all right. We'll get the right day. This was Monday last week. This is the 19th. Ah, the delay. YouTube delay. No worries. Okay, well, I'll just carry on with Monday, and then if you just tell me which date and which bar number we can talk through. It's a good question. So once you have a trading range, what I want to say is once this trading range is in effect, if you buy low, you're buying maybe with another size to add on lower with a stop below, or you're buying more below and a stop, a scalp size below. So you're willing to let the range fail, break out, and come back in, but you're not trying to swing out of that range. So we're not putting targets up here. And at the same time, we're not putting stops far away out of that range either. So we're just taking care of that range. Then we break out of that range here, and you can see on the 60-minute chart, I thought this was the key because we're in a bull spike, pull back to the moving average. Probably want to be sideways to up. And as long as you were sideways to up from, the third hour, you were probably okay. Yeah, you might have got stopped out on this pullback, but if you were still trading, pretty hard to do anything but buy in there. Anyway, that was Monday. Tuesday was more difficult, I think. Hi, Ben. Yeah, good question. We'll talk about breakouts as well. Thanks. Yeah, symmetry's a tricky one. So we're going to follow the same process. We're coming into the session, and this is all you see. A very strong bull trend. So we're always in long, leaving the last session. It's always, I believe it's good practice to let this move appear again. More rare for this just to drop off without news. More common for this to have a little bit of a second piece. We have a gap up. So the gap up means we've accepted the bull breakout, but the first bar is bearish. So we're still bullish, higher likelihood of a trading range. If you want to sell, you're selling to scalp. I think it's easy to see a bar one as a bear bar and go, oh, high of the day, I'm done, I'm a trader. No, bar one has a very low chance of being the high or low of the day. And if you look at the daily chart, all these bull bars have got small tails underneath. And that's because these first moves are pulling back to a location that makes sense. If you've been on my channel before, you know I have these like pre-market drills. They're not my videos. Thought I'd like only search my channel. It's got randoms. Yeah, pre-market drills. Is yesterday a good signal bar? How to use the 60-minute chart. If you take a look at those drills, they're very short videos. You'll see that this is a good-looking bull bar on the daily chart. We pulled back to allow people to enter at that price. This is a really common pattern. The daily bar is a good signal, but we don't open near it. So they can't enter at exactly the price they want. So my advice would be, if you're short here, I think I ignored, I'm not sure if I scalped short or I left it, but I was definitely long here, 14, 15, 16 for a swing up. But I just ran it to the high and then I was done for the day. But that's a common pattern. You've got to have that in your repertoire. Like anything, write it down, open your charting platform, look back through the last 50 to 100 days, see how often a good daily signal bar comes back to the close before taking off. We're going down, we gap down, come back, and take off. I think it's a good pattern. Al calls this a wedge pullback. Oh, it's Tuesday, this day. Okay, so Reza, we're back on. Bar 6. Is it? It's a real shame you can't just drop a screenshot. Can you screenshot to my Discord? We'll just double check. I just want to make sure we get the day right. I thought that was Tuesday the 20th. Unless you're in a different time zone to me. Should be the 20th. We'll see. We'll see. Oh, I know what you mean. Yeah. Okay. I'm with you. Here. Yeah, because what you're doing is trying to catch that move. Now, what Al would call this, I believe it's in his second book, is looking at double bottoms, what he calls a bad double bottom, in that it's not testing the most logical support. So this could be the low, but yesterday's high is here, yesterday close is here, and the moving average is here. So think about an if-then statement. So, okay, daily bar, I'm probably looking to get long. I might let go of the first short trade so that I'm flat. Okay, if this goes down strongly and sideways, forget the long trade anymore. Okay, maybe that's not on today. If it takes off from here, we're going to get bull bars, a couple of small ones, a big one follow through. We're going to get notice. Bears will probably try twice to reverse it and then give up. The other possibility is this is going to come all the way down to that magnet and then do this. So either you try the first time small, it would be my advice. And then when you get the second time, basically the second reversal and a second entry full size, you might even add some size because the probability is higher if that's how you trade. But if you take that, you've got to take that. Occasionally, both those are going to fail and we end up down there. So I wouldn't scale into either personally. I don't like to scale in on the open because we're still discovering a range. And that range might be much larger than you've calculated to begin with, you know? You think the range is 80 points, but now the range is 100 points, but the range could very easily become 150. And you're going to run out of size. And the moment you exit, that's probably going to be the end of the range. So how would you exit? Okay, so if I'm long above that bar, firstly, 6 is a terrible entry bar which triggers. So if my stop was down here, I would pull my stop up immediately because there's a chance it's going to do this, right? 7's still a bull bar, we go above. That's a second entry short here. I nearly took this short because it's such a good signal bar and we've had 2 of them. But I thought, no, just stick to my plan. So once you get 2 signals against, cut it, and then you're ready to participate again. I think Al says you're still bullish. You don't suddenly switch to bearish. You're just like, okay, I'll wait for 2 more legs. Well, panic exit by pulling your limit order up to below 5. And then once I see that bar, I'm pulling it up below that bar. If that stop entry triggers, I want to be out. If the next bar is a good looking bull bar and gets follow through, well, now I can take a different trade. But one of the things that Al talks about is if a trade doesn't work, you expect 2 legs in that direction. So if I get out of that long so that I can wait for a couple of legs. And if you like to switch back and forth, you can get short. But I was pretty confident on the long trade, so I just want to stick with my guns. And then if it flops, whatever. I'm not in a long, I'm not in a short. It doesn't cost anything except to sit here and say, oh, I wish I did something different. So yeah, does that help? So you have active management there. Alternatively, if you're agile, you think that's a bad entry bar for a swing, you're ready to short. So you're taking the other side of that exit. You know, bulls who are like, that doji's not the signal bar for me today. That's not going to be the start of a big swing. And you jump in for that short. That's the other alternative. So the open has a lot of those very quick moves. If your P&L sucked last week or last month, A, stop reversals, B, let go of the first 3 to 6 bars. Forget pre-market, just wait until things are a bit more clear. And that'll probably save you a lot of heartache. The worst thing, something I did for many years, was buying, scaling into longs, and then you work out it could be a bear trend from the open about here when you're long 3 or 4 positions. And you just think, man, how did I stuff this up again? So yeah, smaller size for reversals I think is the way to go. And check your personality. Can you add back in later? I think there's 2 groups. There are traders that can get back in and traders that can't. So, and it probably changes throughout your trading. So if you exit this long trade in a channel, say you buy here and you get out, and then we keep going up, either you're, hey, I took a great trade, I don't care, or you're getting back in, but you can't sit there upset, because the result of sitting upset for 9 bars is what? You're going to convince yourself just to hit that button. And you're probably hitting the button right at the point where everyone else is taking profits. So that's late leg stuff. Okay, so maybe we don't need to go through every day on DAX. Let me know if anyone wants FTSE. I don't know how many people trade FTSE, but I thought that was for Tuesday. And then Wednesday we had the opposite. Gap down and then pull back to basically the close. So same pattern. Gap up, pull back to the close for a buy. Gap down, pull back to the close for a sell. So one pattern, you got both days sorted. So you can be long here, no problem, but you're just watching this price very carefully. I did nothing here. I saw these 2 bear bars and I was like, oh, we're doing what we did yesterday. So I sold 14 and then I sold more at the close. It's a freaking great trade. I wish I'd held it for longer, but that's the trade. And if that trade fails here with more bullishness, well, then I'm okay, because there's more range to the upside. I can get out and probably get a trade in the other direction. So, okay, so not much on FTSE. That's fine. That was Wednesday. Then Thursday. Thursday we had a gap down and a sell signal. Oh, this was the day I was in the euro room. Ha. So it was a spike. I sold. I got out too early. I had to get back in for the low one sell, and then got out down the bottom here, and then I sold again up here. And then we're basically done in there. So that's a gap, a spike in the direction of the gap. Pretty common open. And then this day was a bit difficult up here, I thought. Strong move out of the gate. I bought the high one. I got out at the 15-minute 1R, and then I bought, scaled in lower, got out, and I basically missed all this. I was a bit distracted, took a phone call, was waiting, and then I thought, you know what? I've missed the move. I've had a couple of good trades. I'll just let it go. I think because I'm in the Euro room later, US room later. So anyway. Hi, Victor. Yesterday I succumbed to a bout of FOMO that erased 2 weeks of progress. Mate, it does happen. Yeah, it just takes a lot of getting punched in the face with news in trading, I think, before we, I used to do dumb stuff. I used to trade gold and gold news, and I was in a restaurant and I basically put a trade on while we paid the bill, and then we were going somewhere else, and I was like trading on my phone back then because I thought I was a big trading hero. And I lost like $1,000 in the time it took me to go from basically the table outside before I checked the trade. And I was like, oh, of course I got the wrong size. And I closed it, and I was like, man, when am I going to learn? Like, there was not how professional trades. And right now I would never trade on my phone. So it just, yeah, FOMO. I would recommend looking at the days of your week. You can use trading software like TradesViz, probably TradeZella, any software where you can just drop your charts in and it does some cool analytics. Or if you're good at Excel, I spent 15 years as an accountant, so I can use Excel pretty well. Just find the days. Could be Monday morning, could be Friday afternoon. There will be a time in there where we suck. And my advice would be to ignore that. Friday afternoon, that's a good time. Monday morning, that's also a good time. And just shave them off. Because that's when my FOMO always kicked in on a Friday. I was close to a target, or there was a big move and I suddenly was trading without the rules. So let me just go back up. There was a couple of questions that I might have missed. Ben's saying, hey Tim, when trading a breakout second leg, struggle to measure the second leg. They often have different shapes. Yeah, look, symmetry is a challenge. So in general, I think general terms, breakouts have about a 85% chance of getting a second leg. Now that second leg could be one bar, it could be the same size, it could be bigger. One tip I use for myself is that this second leg will itself often have second legs. So this distance gets kind of fractured into smaller pieces. Okay, if we take this and stick them all together, so we did actually get a bigger second leg. It was just chopped up in pieces. Now, how do you trade it that way? Well, it's difficult because if you've got a stop that's this big, 60 points, you're going to be trading incredibly small here. So I would look for half the size of the breakout as a general rule. So here you've got it in two directions. You've got a bull breakout that got a second leg. You've also got a bear breakout that got a second leg. It's about half. If it goes longer, then you might get a second trade in that direction, but generally one breakout, one trade. Can't recommend that style enough. When it fails, here you get a breakout, oh, it fails. Okay? So you take a loss. Breakout down, second leg down. Breakout down, third leg down. Stop trading breakouts, leg 3. Breakout up, second leg up. See, half size. So you'll find a system that's going to work if you are purely, oh, this is my initial risk, I have to have this target. If you want to trade that style, you're going to have a lot of trades that give you a scalp profit and then you get stopped out. If you can be more flexible with the price action, I think you'll enjoy it more. So, for example, this is an enormous breakout. So there's absolutely no reason to sell. You just expect every reversal attempt to be a pullback. And if this pulls back all the way down, well, so what? You didn't get long, you didn't get short, you didn't lose anything. But your ability to look for a second leg up from this bar, or this bar, or this bar, or this bar, you see what I mean? The probability was with you to at least take one good trade in there. Does that help? Maybe Ben's jumped off. So strong breakout down. I took this short. So I took a short here, then I took another short, and I had to get out. But I don't stay attached to selling. So okay, that sell didn't work, and now we've got a new high. Now we've got a new breakout. Okay, well this needs a second leg up. So you wait for a buy signal, and now you got a buy signal. Now you got a buy signal. Now you got a buy signal. Take one in there. I think I found a lot of peace and enjoyment and success with that system, so I recommend that. Hi El Kulo, hope you're good. Andy, yeah, so Ali Moinafshari, he's awesome. He's got some great stuff on those stats. So my style is very similar to his, not as advanced or technical by any means. I'm a little bit more, I would say more simple style. I'm really just focusing on who I think has the strongest breakout. But the key part of that skill is if it loses, it loses. Whatever. And so once you can take that loss, go, okay, well, there's a breakout, didn't get a second leg. That's rare. That's a surprise. Now we should do, and now a new trade's going to set up. And so we had some of those on Thursday here. So here's a breakout. Oh, stop got run. So there's two trades here now. One is you have a second leg down or a second leg down, and we never got a new low, so this whole piece might get a second leg. So it was okay to buy 18 and later. So you actually had a whole bunch of trades. So if you took a loss on that long there, I got out 9, I think. I bought somewhere in here, and 9, I was ready to close, waited for 10. No one's going to buy above 10, so I'm out below 10. I think I sold for a second leg, and then I was long. I think maybe twice in here. So you recover your loss and you get back to green. But it's that ability not to get upset, throw your hands up and be like, oh, it doesn't work, and go and find some other strategy. So second leg here, the gap down is a second leg. So don't buy here if you can't absorb a pullback. The highest probability is the bears are going to get something. Anyway, I hope that was useful. We can cover FTSE, we can cover ES, or if everyone's happy, we can wrap it up there. I had quite a good week. Not too many dumb mistakes. Buying here was a dumb mistake. I mean, it's just easy to stuff things up, you know, like that's a strong spike. That's a strong spike. You know, the chance of this just suddenly going up there is pretty low, right? You're more likely to go sideways, right? You're more likely to get a box than a spike, but you get excited and then you have to exit, but then it's okay. Then where I bought, which was somewhere here, becomes the sell. So then you're back to green, and then you can take other trades. But you know. What's the format of the new Euro room? So we just piloted this month, but we're going to try and make it more permanent. Reza, yeah, look, that's my mistake. I haven't been consistent on going live. I was doing market reports for like 3 years, and having the opportunity, I think, to ask a trader questions, not necessarily they're the answers, but they might give you another angle to research. I always wanted that, so I thought, well, why don't I do that? Maybe that'd be helpful. So, unfortunately, no matter whose course you do, no matter whose advice you get, you still got to get back on the charts and with a pen and paper and go, okay, how many times did this setup appear? What worked? What didn't? Okay, why didn't that work? When it doesn't work, what does it look like? You've got to go and run those numbers before you'll trust them, I think so. Yeah, you read the books, you do the course, and then applying it takes a decade. Yeah, I mean, it took me a decade. I found amazing ways to lose money. It's just amazing. Like, you know, I'm going to do a prezzo in Orlando, so I'll talk a little bit more about it. But I've got some drills I use on trade markups, and I just want to design a session in Orlando where we can have a workbook. I'm hoping. Let me know what everyone thinks about this. So the idea being that you'll mark up your trades before that session, you know, so you've got 30 days of trades, and then I'll have a workbook with a whole bunch of exercises, and during the session, what are the instructions, fill it out, get some stats, and hopefully we'll be able to work through 5 or 6 of those in the 90 minutes. And I think that will really help just shift what needs to shift to get that edge happening. It's just not, it's not one thing, it's like a lot of little things. So let me know if that's sounds good. Ali did a session with a workbook last time, but he's got such stamina. He went for 4 or 5 hours, but I'll try and get it done in 60 to 90 minutes and see if we can do it. Victor's asking for money management advice. What kind, mate? Yeah, go back to the books. When I went back to Sydney at Christmas, I didn't trade at all, but I took trading ranges, a bit of light reading, and rereading it, I learned a whole bunch of things, that little gaps in there, and I came back and since January traded better. So getting back to fundamentals always good. Any questions about ES? Days, opens, trades, just let me know. Otherwise, I'll wrap it up. That weather out there looks horrendous. Yeah, thanks, Andy. That's a really good point. You get so much info and you're done. You're full. It's like no more can get in. And then, so one of the techniques I did was to print out the past 20 or 30 days of charts, and I put them all on my floor. And I was like, what am I good at? What trades do I like? And I was like, oh, I like high twos. I like a pullback. There's an obvious bit of momentum. There's a pullback. I can take that trade. Win or loss, I don't care. I'm comfortable taking that trade. I don't get upset. It works, I'm happy. It doesn't work, who cares? But it's still a good trade. So I kind of built my trading off that. So, and my style is breakout pullback. So it's just a question of whether I think it's strong enough for a high 1 or a high 2 or a high 3, or it's a trading range and I want to do the opposite. But finding that one piece and then building around it is just going to save you a lot of hassle. Awesome. Victor's risk per trade, I would start small, like 0.25%. Like scaling into 0.5%. I would be keeping it as small as you can. If you take a loss, you care 0%. You just like, whatever. My mistake was always starting small and then getting upset that I was small on my winners. So scale in a lot of times because I think, I'll close it before it hits the stop. So I'm not honoring the stop. I'm not following risk management. And for all the times you win, the market drops 20 points and you're like, oh, wow, that's like 4%, 5% of the account. Like, who cares about all the 2.3, 3.5 point winners you had? You know, to recover from that takes a long time. So, yeah, small. I know online everyone's like, you know, am I going to do 1% or 2%? Man, I never do 1% or 2%. So, I don't know. That keeps me light, relaxed, and maybe that's because I had a problem getting upset trading. I was happy, or I expected it to work, but then when it didn't work, I got annoyed. So I would experiment with trading, yeah, 0.25%, 0.5%. I mean, you think about the maths, okay? There was a lot of trading groups that I was in where people are like, oh yeah, great trade, I made 4%. 4% a day is ridiculous. That's ridiculous, right? Because you double your account every year is awesome, is rock star, is amazing. But if you're making 4% a day, I can't even do the maths on that. So you put the standard very low, all right? You're going to trade 200 to 250 times a year. What percentage do you need to make every day to double that account? 0.5%, 0.25%. It's very small. And if you use that methodology, you suddenly like, okay, I'm not going to become a great trader tomorrow or next week, but I can turn up and do 0.25%, 0.5%. I can do that. We've all done it. You turn up, you take a fantastic trade, you're done. But can you repeat that without getting too angsty, too like, oh, why don't I just go for 1%? Why don't I just go for 5%? It's that once that greed kicks in, funny stuff happens. So anyway, I hope that was useful. You're always welcome to send a message on Discord. Just find me in the Brooks Trading Room. Otherwise, I'll catch you all during the week. Have a good weekend. And see you then.